Hello there everyone and welcome to this week's special presentation, A Personal Guide to Smart Investing, Speculative Approach. So it's my privilege, my name is Steve Chappell, the Director of Trading Systems Development here at VectorVest, to bring you this specific investment mentality. So we're going to focus on, as guests, speculative investors who are folks who are looking for big gains without any regard for risk. The fundamentals or the value safety of a company, they mean nothing to them. They buy stocks on just the thrill, the hype, the rumor, the excitement of all the volatility that these stocks are going to provide. The speculative investor, therefore, is the gambler. They're betting that the risk that they're going to take on, in many cases exorbitant amounts of risk, are going to pay off in spades. They just love the thrill of the hunt, the excitement that quick buck could possibly provide. The overnight millionaire. In instances. Well, let's dig a little deeper. Let's be careful. Give speculative investors their due. It's just important you understand who you are and what you're dealing with, right? So the fellas here have been laying out the strategic investment matrix very, very well. I don't feel like I need to cover a ton of bases here other than to say the speculative investor or trader, we're going to be dealing with extraordinarily high risk, which ultimately tends to produce lower reward over time. It's not to say that you can't hit some monster home runs in this category. So it's a lot like the gold panner of yesteryear, where they were out there in that Wild West chasing down those magical veins of gold, willing to spend hours upon days upon months upon years sticking that pan down in the water, sifting, bringing it up, hoping to see some huge nuggets of gold in there. And sometimes you find one, right? And when you do, it can be life-changing. But how many times do you strike out along the way? And how many times do you never find the big one to come along? So it's a difficult brand of stock, and it's a difficult mindset to deal with. And so we're moving along from aggressive investors whose main emphasis is on that growth engine, right? The high RV, willing to give up some risk to get more profound potential gains. The conservative investor, the polar opposite there, where the emphasis is on safety, strong earnings track records, good dividend yield, don't have to stomach massive drawdowns in the stocks that you own in most cases, right? Where the prudent investor, they want their cake and eat it too. They want the really strong safety net, but also an emphasis on that higher growth so that their capital appreciation can be profound, and willing to give up some of that better yield, willing to give up, not just chasing at the emphasis truly on safety, but making both attributes a stalwart of their stocks that they pick. That way, you get some prolific winners, and tend to have quite a few of them over time. The speculative investor, the polar opposite of the prudent. Now again, we're not really putting an emphasis anywhere other than that news, the rumor, the hype, the thrill of the hunt, the chase, right? If some of them happen to have some value or safety, fine, but that's not what I care. What we care about here is the story. A lot like the meme stocks, things of that nature, or even could be a game plan, right? But there's no accounting for fundamentals here. It's just stocks that are in the news, things of that nature. And so, as opposed to more volatile stocks in the aggressive category with really strong upside, or conservative stocks that are steady performers who often pay a very nice dividend, or prudent stocks who combine the best of those worlds, now we're not accounting for any of it at all. And we end up with riskier stocks that have lottery ticket upside when we get them right. So, I would be remiss not to take this story into VectorVest, because what I've figured out here at VectorVest now over my 20 plus years, stop counting. It's dating me. But VectorVest could show you the story. It can really lay it out there if you let it. So let's get in VectorVest and see what all this looks like. All right, so day's getting better as we go here, but we're still 3 ticks into the red. Well, that's a story for another day. So let's come up here to the top, and in spite of it not being the best days to be looking at stocks, we're going to go to our search tool to find some. So we go to the Unisearch tab over here on the left. Remember, in the searches section of the directory on the left, you also have things broken out by investment temperament and some special folders here as well. But the searches speculative folder is where we're going to isolate things today. And lo and behold, there is a basic search in here, just as laid out from that information from the little green book that we just went through with the investor matrix and so forth. This strategy, speculative stocks, has those 2 parameters built right in. So we're actually going to be mandating in this case. It's no longer even the emphasis, if you will. We're mandating that things have to be poor in both categories, because if they turns out they can get something right, that's going to catch a lot of folks off guard, and these things can shoot up the page like nobody's business. Okay, we'll make sure they're at least $1, 100, got some general volume there. All right, let's run it and see what we got here today. Okay, so you got things today like GCI. This cryptocurrency stocks have been really trying to break out. We can look at a few of these and get kind of a feel for the DNA on the hard right edge, if you will. The nice thing about VectorVest is on top of the search parameters, there was the sort, right? And that sort is magical in this arena in that at least it's still trying to provide you the best of the best. In other words, the best speculative candidates out there. And realizing that this is a company here, Gannett, media newspaper, folks looking for news and so forth. Anyway, down at the bottom, EPS, does that look like a steady, consistent money-making proposition down there? It looks like a pretty bumpy, rocky ride, doesn't it? And so, this dramatic price rise doesn't appear to be in relation to anything material in terms of earnings that the company is working itself through right now. It appears to be driven on the news, the rumor, the hype, right? So we could use this news button to dig into some of that at some stage if we'd like to do that. Irene, this is a cryptocurrency stock. Look at that thing go. I mean, it is moving, right? And so the trick becomes, how do we find maybe some of these before they even blast off and double or triple by the time we look at them, right? Well, we can go back historically and we can look for, that was a beautiful wedge breakout, wasn't it, on Wolf? We can look for these situations, okay? Let's go back. Let's just date it back a month. And let's see where we're at when we go to 13th of May. So we'll run it up. Oh, hey, look at that. Right at the top of the list is GameStop. Speaking of meme traders, I'm not here to pick fights. I'm just here to point out facts, right? All we're going to do is graph it up. There's some opportunity here. Let's see what we got with these charts. This reminds me of dry ships and so many other short squeeze things that happened long before Wall Street bets even became a thing. But my goodness, look, I mean, is there opportunity here? Absolutely. You just got to be willing to stomach a lot of volatility to get to the other side of it. The danger is you end up being one of the last to get in, only to see things plummet and fall off what seems like the face of the earth. And all too many of us might end up selling under some of those kinds of conditions, only to see the thing skyrocket again, So speculators need to have cast iron stomachs. They often need to be very active. They need to be plugged in to the story, to the plan, to the things that are happening. And they sometimes need to be very quick to the trigger and react to things that are in fact happening, right? So yeah, I mean, we found the stock on this day. Stock went up dramatically the next. So there was opportunity here. There was opportunity even a month from there, roughly, right? About 3 weeks, right? So, but you had to sometimes withstand being underwater a good bit, before you get there. So that's just part of the story that I think needs to be laid out here. Is while stops probably should be used by most folks, a lot of times these are the kind of stocks, that you just gotta kind of buy and hope. So an entire portfolio of these kind of stocks, or a one stop solution, is really going to be sort of detrimental to your health if you're not careful, right? It can turn good family events and occasions into really bad ones. So you're at least going to want to be diversified. You might even want to have some stocks in other quadrants, realizing you're more of a speculative person deep down inside, and just mix some of these guys in there, right? These are all possibilities. Just want to throw out food for thought. We can own an NVIDIA, and we can own a GameStop, and we can own 19 other high relative safety stocks, right? Or we can own an entire portfolio of GameStop. Ultimately, the choice is going to, type stocks, the choice is going to be up to you. If you're going to try to do it, VectorVest is one of the best at trying to get you there. Let's just look at a little bit more time, and I'll skip to the chase. We'll go back to the beginning of the year. There's no 13th, so we'll just go to the 12th. Run the search. And if we quick test these, you got some prolific gainers, you got some prolific losers. In this case, there's more losers than there are gainers. And given time, those winners might outpace and outrun those losers because they can run up hundreds of %, right? So let's go back a little further. Let's go back to November. We'll run it the 13th here. And here we go, different list of stocks, right? These are all the stocks that, guess what? RV and RS, all below 1, that's mandated at that time. At the time the search was run. Doesn't have to be the case now. It was the case then, okay? And sorted by VST. Again, that's what's going to give you your puncher's chance here at landing on some of the big ones. And look who's number 2 on the list, actually. My goodness. Abercrombie and Fitch? All right, well, let's see what we got here. Yeah. All right. Still tells the story, I think, very well. Here, because VectorVest has things like the ability to sort and sift through and shuffle the deck and put some of the better choices at the top of a list, on certain dates, you might hit a couple of home runs. So you got Abercrombie and Fitch up 184. You got TCRX up 98. Some other pretty good winners. Curves up 68. We sorted out. You still got some pretty big losers here too, right? So no matter how good we are at sorting out stocks that don't do a very good job of growing their earnings and that don't have, in many cases, even positive earnings growth, right? If you have that combination, it's real hard to go up over time, So, even here, there's a challenge, right? But it's giving you the puncher's chance. I think that's the main thing to talk about. And I can remember working shows with Dr. DeLito back in the day, and he'd say, "Oh, you need El Cheapos. That's what, Steve, go find El Cheapos in the speculative folder." I'd go over here and run it for him. But anyway, let's quick test these. Look at that. So 67, 60, 37, 27, and one that lost 94, literally almost all of its value at this point. And that's what you get, So I think Doc's right in the book. With a little bit of money management, even though it seems awfully difficult, particularly with the meme stocks, okay, short squeeze situations, those stocks run so crazy in both directions. Literally, what they're trying to do is the right thing if you're going to do it. But, it's not new. I wish folks knew more about that. The thing I would say here is, with a little bit of stops, although loose, you can't run in here with 7% stop losses or 10 or even 15 or probably even 20. But, with some stops, I've been able to do some testing with 25s and 30s and 33s, and things like that, and be able to move the needle a little bit. But the winners need the room too, not just the losers the winners need the room to get to be the winners. So just kind of some food for thought there. I like to try to be as helpful as I can, as often as I can, and that's some light I can shed there without having to do too much else to show it. Okay. Now the one I really like, and I've seen Doc run this many times as well. Now when you run this one, the reason this one is largely speculative is, again, there's nothing in the search saying that you have to have necessarily high relative value. Now the growth rate here being positive does help, but it also says we want the safety rating to be less than 0.9. So it's got an interesting set of criteria, doesn't it? So you do end up with some stocks in here that have pretty good earnings engine. Okay, pretty good RV. The safeties are still quite low though. And so it is speculative. Okay. Now that might bear out some fruit, having a little bit of earnings, and I don't see any negative growth rates here, for example. Let's see what this does. Yeah, so the losers are far less dramatic. One would certainly expect that. We would also expect more winners. And I think that's being displayed by the amount of stocks up double digits, and nicely up double digits. Look, you don't want to just totally throw RV out the window necessarily if you're a speculator, right? If you can get some relative value, you should take it, I think. So anyway, hopefully this was helpful. And the other thing we could do here, is we could let's just take that El Cheapos and let's talk about the ride. All we're looking at right now is the result, right? What happened along the way? How enjoyable was the ride to prosperity, kind of thing. Well, if we quick folio, say the 10 here, and just open it up, it's quite a ride, Remember, they really take no account for value, safety, timing, really anything other than just buying these stocks on a date, trying to hold on for dear life to get onto those big profits in some of them, right? So the net result then is, you have a lot of volatility that you're going to have to learn to cope with in terms of still being a functioning human being, right? When times aren't as good as others, you're going to ride euphoric highs and some very, very emotional lows from time to time along the way. In particular, if you isolate all of your investments into this particular quadrant. The one thing I want to make clear is, look, I think people need to live a little bit. I come from that school of thought. That's my own personal. So this is not a VectorVest belief, but necessarily. But I also have like to have 20 high relative safety stocks. Look, then you want to mix in a couple of speculative stocks that are in the news or whatever. Go for it. Live a little bit, man. Right? It's not going to kill you. Just don't. It's very difficult sledding if you end up with an entire portfolio of speculative positions, and you just got to be ready for it. Some of you are. Some of you aren't. You got to make that choice. Okay, but mixing a few of these guys in here, particularly ones that get on Abercrombie and Fitch, I'll take it. All right, guys. All right. So hopefully that lays it out well. It's as good as I could do in short order here. And so I just want to thank everybody for being here. Thanks for going through now the entire investment matrix. And I think you've learned a lot along the way. And really, it allows VectorVest to shine. There is nothing else near as complete in terms of software at providing you useful information about the stocks that you're already own or that are interested in buying or trading. All you got to do is understand a little bit about RV and RS, and you could be you could be on TV. All right. But we'll see you guys soon. Have a great weekend, everyone. We'll see you right back here at VectorVest University next week. See you then.